Hey, it's the banker, and this is my video to go with my Investing for Dummies post over at Hub Pages. And today I wanted to talk a little bit about general market direction. And this is the first step that O'Neill recommends in his CanSlim strategy in the book The Successful Investor, which I think is one of his better books as far as laying out how to actually implement his CanSlim strategy. The first thing he says that you need to do is determine whether the market is in a general uptrend or a general downtrend. Now, the reason he says this is because his research has told him that 3 out of 4 stocks follow the trend. And so in a market downtrend, really no matter how good your stock is, what's going to happen is it's going to be pulled down by the market. So step one is you only want to invest when the market's in a confirmed uptrend. And how do you determine that? Well, what he says is that each day you got to analyze the market. And the market to him is comprised of basically 4 indexes: the S&P 500, the Dow Jones Industrial Average, and the New York Stock Exchange Composite, and the last one is the NASDAQ. And what you want to do each day is look at these charts, um, these indexes, and see whether the price of the index closed higher or lower, and whether it closed higher or lower as far as the volume is concerned. So there's 2 pieces of data you want to look at for each index each day. One is the price and one is the volume. And if volume closes higher than the previous day, like if we look at um, the New York Stock Exchange volume today, it was actually higher than the volume on the previous day. Now, what he says is that if the market closes higher and volume closes higher, that the market is under accumulation or more people are buying than selling. If volume is higher and the price of the index closes lower, that means more people are selling. If the index closes higher or lower on lower volume, then basically it's neutral and it doesn't mean anything. So each day you want to look at each of these indexes. So today I looked at the New York Stock Exchange, and that's what I compare. The volume I compare to the S&P, the Dow Jones, and the New York Stock Exchange. And volume was higher today. And I also looked at the NASDAQ to see whether volume closed higher or lower on the NASDAQ, and it was also closed higher. So what I needed to do then was to look at the price and how it closed for the day, and I found out that the S&P 500 closed down 0.33%, the Dow Jones down 0.47%, the New York Stock Exchange closed down 0.17%, and the NASDAQ closed down 0.53%. Now, in all these cases, because the market closed lower on higher volume, all of these indexes realized what's called a distribution day, which means more people were selling than buying. Now, the only exchange that didn't have a distribution day occur, was the New York Stock Exchange, because it closed down less than 0.2%, and that's a rule that he set up to determine whether it's a distribution day. Now, that in itself doesn't really tell you anything, because one distribution day doesn't change the market trend. You have to keep track of the market on a daily basis. And over at investors.com, there's a column called the Big Picture, where they keep track of, the number of distribution days for each index. And once it starts approaching 4 or 5, or a little more, maybe up to 7, then I've noticed they change the market trend. These charts I got in here, you can use these for free over at stockcharts.com, but also this data that I'm talking about as far as determining market trend is available at investors.com. It's also free. You can also watch IBD TV to have them go through the indexes each day and tell you what the market did. The only thing that's not free, that's part of a subscription, is the IBD Big Picture column. So if without that information, you kind of need that to determine whether the market's in an uptrend or downtrend. And a lot of times they'll say in the videos. So what you want to do each day, go through the indexes, determine whether they were up or down on what kind of volume. Then once you've decided what it's done, then go to IBD TV, and watch the market wrap, which comes out every day sometime after 6:30, and see if what you determine the market did is what they show that it did, and just start keeping track of it. So one thing I've done too is I've started keeping a spreadsheet, which I've got links to in my hub page. The first one I made was the general market direction, and here what I've done, I've made a simple spreadsheet that you can access, and I'll be keeping a tally on a daily basis as I get time, and this will update, and you can always use this link to come back and see what um, I analyzed the market for the day. I took to kind of go through the spreadsheet here, like today, that was yesterday's close. The IBD had said the market was in a confirmed uptrend, and these were the number of distribution days that they said we were at so far. So you can see the market's under a little bit of pressure, and I made a little note here as to why the NASDAQ wasn't a 0.2%, wasn't a distribution day. I thought about keeping more detailed information in the spreadsheet, but really all that matters was it a distribution day at this point? If the market was in a downtrend, then we'd be looking at a different kind of day, but we'll talk about that later. One other thing I've done is I've also set up a checklist of what I want to do each day as far as determining the general market direction, and I went through these steps. And so one thing I suggest that you do is once you start identifying whatever strategy you're going to use, if you use CanSlim or whatever, that you start making checklists to go through each of the steps that you need to take each day. That way you don't leave anything out. You do the same thing every day, and you can kind of fine tune your approach. And that's what we're going to be doing here. So anyway, I hope this video helps, and I'll talk to you soon. Thanks.